How to become a crypto millionaire in a bear market. We are going through a global recession as economies worldwide have taken a hit because of the corona pandemic. Like everything else, the digital space has also been affected, with prices of digital currencies like Bitcoin and Ethereum dropping from all-time highs to almost a quarter of their price. This has prompted a selling frenzy as cryptocurrency owners started dumping their investments for fear that they might lose everything. But there's a silver lining. If you want to become a millionaire, this is the perfect timing as bear markets pose a great opportunity. Hello, and welcome to our channel. Cryptocurrencies have slowly become more and more important to the point that even governments and financial institutions have started to invest in them. If you look at the numbers right now, you may only see red lines and falling prices, with many even calling this event the death of cryptocurrency. But get all that nonsense out of your head, because in this video, we're going to tell you how to become a crypto millionaire in a bear market. We will discuss how to navigate the bloody waters to average your investments and limit your risk of entry and what to look for when trying to time the market. Finally, we'll talk about the winning mentality to come up on top and prepare yourself for the next bull run. So, let's get started. As we said earlier, the market is in recession. This situation is called a bear market. If you're unfamiliar with the concept, let us explain. There are two types of market. One is a bull market, and the other is a bear market. Increasing prices and an expanding economy typically describe a bull market. As for the latter, in financial terms, a bear market occurs when stock prices fall steadily over time. As a rule, it's used to characterize a situation in which the value of a security drops by 20% or more from its previous peak due to widespread pessimism and bad investor sentiment, or FUD, fear, uncertainty, and doubt. Bear markets are most commonly linked with drops in broad markets or indices like the S&P 500, but declines of 20% or more in a security or a commodity over an extended period, usually 2 months or more, can also be regarded as a bear market. So, with the prices of the cryptocurrency being the way they are right now, it's safe to say that we are in a bear market. Before we tell you how you can benefit from this opportunity, click on the subscribe button and do hit the bell icon to receive instant notifications every time we come out with a new informative video. We can tell you what we believe are suitable investments in cryptocurrencies. However, we're not financial advisors, so do your homework before putting your money into any business. Investing in cryptocurrency requires time and work, and it may be risky. However, if done correctly and with patience, it has the potential to turn you into the next Warren Buffett. With that out of the way, let's get back to telling you how you can benefit from a bear market and become a future millionaire. Buy the dip using dollar cost average, DCA. The first thing you have to do is buy the dip using dollar cost averaging. When markets get highly volatile, it's easy to find yourself on the losing end of a crypto trade. But that doesn't mean you have to passively watch your portfolio dwindle hour by hour. Those who have been saving up fiat currency, stablecoins, or who have access to liquid funds in the bank will be able to buy the dip if the price of cryptocurrency drops. This phrase is commonly used in the cryptocurrency sector to describe the strategy of stocking up on cryptocurrencies during periods of severe market decline. The thinking is that those who buy the dip will make a killing if prices recover and surpass their earlier highs. Like the legendary stock trader Warren Buffett remarked, "When there's blood on the streets, you buy." This is coming from a guy who can be considered to be one of the most successful investors ever to live, so you better listen to what he says. One can buy a dip with a single trade, but dollar cost averaging, DCA, is a preferred method. To do this, you'll need to divide your available capital into manageable chunks and execute multiple trades over time. Take your 1,000 emergency savings as an illustration. Divide the total into smaller sums, say 5 $200 chunks or 10 $100 chunks, and use those to make trades as part of the disciplined dollar cost averaging, DCA, approach. The rationale is that it's nearly impossible to predict when an asset's price has bottomed out, reached the lowest point before reversing. So it's best to buy a modest quantity and see if the price drops further before committing the rest of your capital. If so, stock up and keep going. If you do this, you'll likely have much more success than if you put all your money on a single deal unless you happen to time it just right. Protect your assets. Invest in stablecoins. While some investors may be eager to get in, others may need more time to prepare. However, it is possible to learn how to profit even in a bear market by taking steps to protect your assets from falling in value. Stablecoins that are tied to national currency, such as the USDT or USDC, are the best bet. Please don't put your trust in algorithmic stablecoins because they aren't backed by anything. In May of 2022, the collapse of Terra Luna was attributed to this type of stability. Would you like to know more about one of our favorite crypto projects and how it works? Then make sure to watch our video on the top right corner. I'll also leave a link in the description below. Many people invest in Bitcoin, BTC, for the long run, and large institutional hedge funds are now buying cryptocurrency. So you might be wondering, why buy in the bear market if keeping stablecoins or Bitcoin won't earn you anything? However, you can earn attractive annual percentage yields, APY, on your stablecoins at platforms like Nexo and Binance. However, most of these programs have low spending thresholds, so it's essential to read the fine print before applying. Binance, for example, provides a competitive APY on balances up to 2,000 euros, but the APY drops dramatically for balances above this threshold. There are still ways to make money, even in a bear market, and earning programs are one among them. There is a minimal risk involved here, regardless of what happens to the price of cryptocurrencies. If you'd like to know more about proof of stake, how it works, and how to create passive income from staking crypto, make sure to watch our video on the top right corner. I'll also leave a link in the description below. Look at the market indicators. You should also regularly look for indicators. Suppose a trader or investor is familiar with technical analysis, the science of forecasting price fluctuations based on chart trends, indications, and patterns. In that case, they may utilize such indicators to determine when a particular asset has bottomed out. While there is no such thing as a fail-safe indicator, they can often serve as a reliable signal for knowing when to buy a downturn. Using momentum oscillators like the one represented by the Relative Strength Index, RSI, is a common technique. The RSI consists of a channel and a line that moves in and out of a channel to indicate change in momentum. There are two signals that you have to look for: overbought and oversold. In the case of overbought, it means that the asset is overvalued and its price is going to come down. As for oversold, it means that the asset is undervalued and its price will rise. Although these two signals can be employed effectively on their own, they are not foolproof, especially on shorter time periods such as the 4-hour, 1-hour, and 30-minute options. So do your due diligence before you make any purchase. Diversify. Another thing that holds true for any investment option, whether crypto or something else, is that you have to diversify. Utilizing DCA across a portfolio of crypto assets is one approach to spread risk. This may necessitate even smaller trades, but will ultimately result in less risk. Obviously, it's not sufficient to invest crypto assets at random. You have to consider things like previous all-time highs, past performance, and roadmap announcements. One exciting project worth watching is Solana. If you're interested in diversifying your portfolio, make sure to watch our video in the top right corner, where we'll break down Solana's proof of history, future price predictions, and everything you need to know before investing. I'll also leave a link in the description below. A winner mindset. Finally, the last thing we can recommend for you is not to freak out. It may seem obvious, but keeping your cool during down markets can be difficult. In fact, it's frequently cited as the most challenging aspect of learning to trade or invest professionally. When it comes to making money in the stock market, people who can't control their feelings aren't the best bet, according to famous American economist Benjamin Graham. The same principle applies to cryptocurrency. Realizing that emotions like fear and greed can prompt hasty decisions that result in a bad investment is a crucial first step. It doesn't matter if you are a trader or an investor. The difference between a profit and a loss often comes down to whether or not you have a plan before you place a deal. Taking a profit is another skill that appears simple but is rather challenging. In believing that the asset's price will continue to grow, greed can cause you to stay in a transaction past the point when you would typically take a profit. Despite your disappointment at missing out on the chance to buy the dip this time, keep in mind that another crypto market crash is likely to be on the horizon, given the extreme volatility of the cryptocurrency market. Keep your calm when a bear market comes in. take profits when they come, and make sure you have some money set up in case of a crash. That is all the time we have for today. I hope you enjoyed this video. Don't forget to share it with a friend who will enjoy it as much as you did. Subscribe to our channel and hit the bell icon to remain updated about all our future uploads. Have you implemented the dollar cost average strategy before? If so, please share your experience with us in the comments below. This will help our viewers make more informed decisions. Thank you so much for sharing your precious time and watching the video this far. Goodbye, and see you in the next video.